Hey everyone, I'm John from Cointree and welcome to our very first episode of Cointree Conversations, our new video series where we chat with industry experts about all things crypto. Today, we're gonna be talking about our favorite topic, which is tax. And I'm joined here by Nick from CryptoTaxCalculator. He's going to help to answer some of your top crypto tax questions and share a few helpful tips for the season. And welcome, Nick. How are you doing?
Good, John. Thank you for having me. Thank you for having CTC. And yeah, looking forward to it. Looking forward to chatting some taxes.
Yeah, no. That's awesome. That's awesome. I know that you guys are based in Sydney, and 90% plus of your employees are actually in Australia. So it's good to have you here.
Yeah, thank you. Appreciate it. Like you said, yeah, we're based in Sydney, Australia. We have our headquarters in Sydney, our office in Sydney, but we also have employees all throughout the world. So we're very much a global company. Not only do we operate in Australia, help Australians with their crypto taxes, we're in over 100 different countries and help all those people with their crypto taxes as well. So yeah, again, thank you for having me. Excited to be here.
Thank you, thank you. Yeah. So. All right, let's get into it. We want to ask you, how is crypto treated by the ATO?
Yeah, great question. So the ATO treats crypto like property, right? So there's the difference there between property and like currency. Currency is, your fiat, your Australian dollars. You buy a cup of coffee with, with your money. You're not taxed on, the disposition of that money to buy your coffee. Crypto, on the other hand, is different. It's treated as property. So there's a lot of specific tax elements uh, that go with that. So, for example, in that same scenario, if you were to use Bitcoin to purchase that coffee, in many scenarios, that disposition or that sale of Bitcoin is a taxable event and needs to be reported on your taxes. So the ATO is one of, or I should say, Australia is one of the leading countries when it comes to tax guidance. So Australia has been releasing tax guidance since 2014 and continuing to build upon what they previously released. So yeah, Australia is ahead of the curve, we could say, when it comes to crypto taxes and guidance on how different transactions should be taxed and reported.
Yeah, no, thank you for that. Yeah, it's actually quite interesting, talking about the coffee and how it could be taxable. And so, what sort of crypto kind of activities are taxable? Like for example, if I do staking or wrapping or swapping, are those activities are considered taxable?
Yeah, absolutely. So you can really break out the taxable transactions into two categories: your capital gains tax transactions and then your income transactions. So capital gains tax transactions are just that transactions that result in a capital gain or a loss, and those are your trades. So selling Bitcoin for fiat is an example. Your crypto to crypto swap, so trading Bitcoin for Ethereum, that's a taxable transaction. Entering into liquidity pools and depositing into smart contracts. Those are all considered, taxable events. And then on the other hand, the income items, that's your staking rewards, your mining, your yield farming. So when you're kind of receiving crypto, that's when you would consider it a taxable event um, for income. So two different variations there: capital gains tax and income. Most times when you dispose of an asset, so like I said, using Bitcoin to pay for coffee or selling an asset, swapping it, those are capital gains. And then on the flip side, any staking rewards, mining, things like that are considered income.
Cool. All right. Let's say like I personally have got SMSF, and like how does your tool and how does the ATO actually treat it like crypto in our SMSF or our company? Like you can actually purchase crypto in a company, and I know there are some companies in Australia publicly listed actually start purchasing crypto, but we're not gonna seg into it. So how does the crypto activity is considered taxable in SMSF or personal names and all that?
Yeah, so SMSF, that's kind of its own unique beast, right? So the crypto tax logic doesn't change. So whether you're a business, an individual, you're trading with your SMSF, it doesn't really matter. Anytime you sell Bitcoin, it's a taxable event. If you're earning staking rewards, that's going to be income. So the tax implications are really the same, or I should say, the transactions that result in tax reporting. That's all the same. With SMSF more specifically, there's a lot more reporting obligations and a lot more, you can call it like administration or administrative tasks around SMSF. So, for example, maybe it's a small thing, but your SMSF, crypto wallet needs to be registered in the exact same name as your SMSF. If not, then you might not be in compliance. Users cannot commingle their personal crypto assets with their SMSF assets. Um, you have to maintain like excellent records with that because if you're audited or just for reporting purposes, you have to have everything squared away. So the tax treatment is the same, but really there's a lot more reporting obligations if you're investing through an SMSF. And then businesses, it's a little bit different, but kind of the same as well. So um, tax logic is the same, right? Transactions that result in tax reporting obligations for individuals, same thing with businesses. However, for businesses, you can't really take advantage of the 50% capital gains discount. So all business income is treated as income, right? So that's kind of the differences between individuals, SMSF, and businesses.
Thank you for that. Yeah, it is. There's a lot of reporting and auditing, and we're just hoping a lot of accountants out there understand about crypto and SMSF tax. So, like, how does the ATO track, or what kind of tech the ATO is using to actually track the crypto activity?
Yeah, great question. A lot of people really don't even think about this when they're trading crypto, right? You sign up with a Cointree account, you buy some Bitcoin, you sell some Bitcoin, you don't even think about anything, right? But the ATO is actually very, very smart, and they've been, I wouldn't say monitoring and tracking, but they have the ability to monitor and track your crypto assets. So they've been doing it since, I believe, 2019. So for quite a while, they use what we would call like a blockchain analytic tool that can track all of your transactions on the blockchain. Um, and if they need data, if there's a criminal case, for example, they can, ask Cointree to give them a specific person's transactions, and if Cointree complies and gives you those transactions, the ATO can then take that, centralized data, centralized exchange data, and couple it with all of the decentralized data or your wallet activity in that, and track your crypto from the point of purchase all the way through its disposition or its sale, and whether that's 2 wallets, 200 wallets, whether you're using mixers or not, the ATO can track all of these with the advanced tooling that they have and that they're using. And I just kind of want to note, it's not a good idea to try to do illegal things with crypto. If you don't know by now, the blockchain and crypto is extremely transparent. You can't hide anything. Once you have a transaction, then transaction is going to exist on the blockchain forever. So once the ATO knows, a specific wallet is yours, then they can track all of, your transfers to other wallets and associate those wallets with that person. So yeah, they use a lot of different tools to be able to track crypto and monitor crypto for really whoever they choose to or whoever they want to.
Yeah, yeah, no, that's I think most people are not aware that they think they can hide their crypto and not pay tax, and 5 years later comes the tax bill with all the penalties and interest. Some people, getting a big tax bill on that. So yeah, no, it's I believe crypto tax calculator is actually a very good tool to actually help them to solve that problem. Yeah, and in terms of the common crypto tax mistakes, what are some of the biggest mistakes the investors make when it comes to tax time?
hmm Yeah, we could sit here and talk about mistakes taxpayers make for 30 minutes. But it really boils down to like a couple main issues, right? Number one is like not keeping good or adequate records of your data. So the crypto data is the most important thing when it comes to your taxes, right? If I don't know that you purchased crypto, if you don't have data that says you purchased this crypto, where did it come from, right? It's in your wallet. How did it get there? Those are the questions the ATO would be asking you and asking for more information. So keeping good records. So downloading all of your transaction history from all of your exchanges, keeping records of all your wallets and your, wallet addresses that you're using, and just maintaining that as well throughout the year. So a lot of times the wallets you start with in, the first of the year aren't the same wallets you use at the end of the year, right? A lot of people create new wallets, try out different services and platforms, and it's really, really crucial that you track all of that activity and you keep records of all of those wallets, because when it comes time to do your taxes, every single one of those is going to be relevant. They're all going to house important tax data. And if you're missing any of those wallets or exchanges or other accounts, then your taxes are going to be off. Your calculations are going to be off, which could lead to errors, penalties, and lead to a lot of not good things. So you want to maintain very, very clear records. And I always tell people, keep a folder on your desktop, on your computer that just is crypto taxes. Every once in a while, download your data, your transaction history from all of your exchanges, all of your different wallets, and just save them to that file. It only takes a couple minutes, and it can save you a lot of time and a lot of money in the future. So that's one. The second one is assuming that you know which transactions are taxable. So a lot of people think, oh, only when I sell, crypto to fiat, that's when I pay taxes. Very incorrect. As we just kind of discussed, swapping from like Bitcoin to Ethereum or entering liquidity pools, these are all taxable events that need to be reported on your tax return. So it's really, crucial that taxpayers and, citizens are looking at the tax guidelines and looking at the laws that the ATO has released, so that they know before they do a transaction what's going to be taxable. Because the worst thing you can do is do a whole lot of trading thinking it's not taxable, and then at the end of the year finding out it is. Maybe those taxable implications will affect the way you trade and which assets you sell and the level of your activity. So it's really, really important to just know which transactions are taxable and know what you're getting in store before you do it. Now, I would say the third, biggest mistake we see is leaving everything to the last minute. So doing your crypto taxes is not always an easy task. A lot of the times the data isn't very good, or there's missing data, or a specific blockchain or obscure coin that you're using on pump.fun or any of these, blockchains that are spinning up left and right. Maybe there's not pricing history for those assets. So you have to go in and find the pricing history and kind of, manually edit your data to make it accurate for your situation. So I would say those are the three big issues we're seeing, not keeping good records, not having an understanding of which transactions are taxable, and leaving your tax planning and your tax calculations to the last minute.
Yeah, that is a very helpful tips, Nick. I myself will create a folder on my desktop. Keep all the pricing, and it's actually a really good tips. I'm actually gonna personally use that use that as well. Some of what you suggested. So, what's the risk if you ignore these mistakes or delay sorting your tax out?
Yeah. So two of the main risks are fines and penalties from the ATO. So if you didn't report the transactions you need to, or didn't pay the appropriate amount of tax, the ATO can, hit you with some fines or penalties. And this could go back years, right? It might not just be for this specific year, it could go back a couple years. But then the other penalty, and it's less of a penalty and more of a shock. Um, at the end of the year, if you don't, keep up with your data and your activity and your reconciliation of your crypto taxes, you can be hit with a tax bill that you had no idea. So, if you don't know which transactions are taxable and you're doing all of these swaps from Bitcoin to Ethereum, this coin to that coin, left and right, and you have thousands of transactions a year, you may have absolutely no idea how much you're paying in tax at the end of the year. You could have a guess, hey, I made this much money, I think I owe this much. But you really don't know until you sit down and do the calculation. So another big thing we're seeing is users hit with a tax bill that they just were not expecting, and that's never fun to owe a huge chunk of money that you just had no idea was coming up.
Yeah, it's always it's always nice to just keep it simple, pay our taxes, have a peace of mind, have a good sleep at night, rather than just try to save a few dollars here and there and hiding here and there. Like yeah, we just want to live, with a peace of mind, right?
Exactly, right? Yeah, just do your taxes, don't worry about it. Like you said, have a good night's sleep at the end of the day without worrying that the ATO is coming after you or going to be knocking on your door tomorrow and trying to collect some money from you.
Yeah.
Worse, sending you to jail. If you completely do it wrong, it's possible that, there are more severe penalties involved.
Yeah, no, that's right. Like, we're gonna chat a little bit about, someone who stole Bitcoin, but like, we're gonna talk about it at the end. That's gonna be a very interesting topic. Um, so, what are some easy ways that people can stay on top of their crypto tax obligations? What are the easy ways, and especially with the common mistakes we've talked about?
Yeah, no, good question. So I think this is what really people are looking forward to, right? Advice on how to stay on top of it and how to be better with their crypto taxes. So I'll break it down into two things. The first one, sync all of your wallets and exchanges to whatever tax platform you're using early. So Crypto Tax Calculator, we're an amazing tool to help you sort out all of your crypto taxes. Founded in Australia, or headquartered in Australia, so we're an Australian bred company. Um, Upload all of your data. It takes a couple minutes to upload all of your accounts. So if you have Cointree or any other centralized exchanges, any wallets, let's say you're at MetaMask or Phantom, anything like that, upload all of your data and start reviewing your transactions early. So rather than saving it to the last minute, if you upload all of your, transactions now, CTC and, some of these other tax platforms can automatically sync your wallets. So if you connect via an API or give your public wallet address, we can keep up with your transactions. So if you synced all your wallets today and then you made 100 more transactions tomorrow, we'll get all of those transactions automatically, right? So the earlier you do it, the more visibility you'll have into your transactions. And like I said, if you're on 5 different, 10, 100 different wallets, it's hard to keep track of everything in all of your apps, right? Going from MetaMask to Phantom to Cointree to this to that. It's very difficult. So if you upload everything to Crypto Tax Calculator, we give you a nice portfolio view and kind of allow you to see all your data throughout the year. So that's number one, kind of getting ahead of it, doing it early. Number two is going to be similar, but it's just reviewing your transaction history. So once you actually upload and sync all of your wallets and exchanges, then you're going to want to review those transactions. As I mentioned earlier, if you're trading on Phantom and using Pump.Fun with a coin that was just released 5 minutes ago, there might not be pricing information for that. So you might have some, I wouldn't call them errors, but holes in your data that need to be filled. So, like I said, transaction pricing information or classification of transactions, sometimes um, an exchange or a platform will report your data as incoming or received, and you don't know necessarily what that transaction is. Did someone give this to me? Did I send it to my own wallet? So categorizing and tagging some of these transactions early is very helpful. So those two things kind of go hand in hand. Get all your wallets and data in there early and start looking at things early. um, let's say you have 1,000 transactions in the year. If you wait to the very end, that's 1,000 transactions you have to go through. But let's say if you did, your reconciliation or you looked at your transaction history at the end of every month, well, now that's only what 90 transactions or so you do at a time. So it's a lot more manageable the earlier you get on top of it, and it's a lot easier to make mistakes when you save it towards the end. So we want to avoid as many mistakes as possible on our taxes, and that can be done just by doing things early.
Yeah, and I think that's how your tool comes, right? Because I found the issues with doing things manually is always the pricing, and I believe your tool takes all the pricing, in Australian dollars, especially a lot of crypto are not in Australian dollars, and like your tool is actually really good at solving that issues.
Yeah, thank you. Our engineers and our team works very, very hard on it day in and day out of getting more pricing services and more blockchains and integrations so users can connect everything they've ever, done on the blockchain or in crypto. Um, they shouldn't have to worry about, oh, I used this account, but I can't connect to my data. So how can I do my taxes? At CTC, we pride ourselves on having over 3,500 different integrations so that whatever blockchain, whatever wallet, whatever exchange you're on, we can get the data and do the taxes for you. It's very, very hands off. Once you give us all your data, most people just, wipe their hands clean and it's done. And we give them, tax reports that are ready to be submitted through, my tax or through your accountant or however you need to do your taxes.
Yeah. So, in terms of reporting, like what's the best way to get the tax reports ready? As you mentioned, to my tax or ATO or our accountant. What's the best way?
Yeah. So UCTC, that's honestly the best way to do it. So come in, give us all your wallets and exchanges, take a look at your transaction history. And then once you've done that, we do the rest for you. We take a look at all the pricing histories, the valuations, all of your transactions, your disposals, your sales, your income from staking and mining, and all of the different transaction types. I think we support over 65 different transaction types. So, really, anything you're doing, we can support. Once you give us all the data, like I said, we do everything for you on the back end. We do all the calculations. We give you nice summaries that say, how much you've made, your gain, your loss, your income, all of these different, categories for your taxes. And then we give you reports that are ready to be used on your tax return. So we have a section in the website that's just the reports page. So you can download your My Tax report, upload that and do your taxes that way. We have what we call an accountant pack. You can download that, which gives you your capital gain, your income, your summaries, and all of this, all in one nice file, and you can send that off to your accountant. So there's many different ways you could do it, but the important thing is to note that CTC provides reports that are ready to be used for your taxes. You don't have to go and create your own report with the data we give you. We do it all for you.
No, that's really cool. No, that sounds like gonna save so much time and headaches, and especially the accuracy of it. All right, let's talk about what do you think the potential. We've seen in the paper about the new Bitcoin tax rulings. Some officer stole some Bitcoin, and what do you think? Do you think it is going to be likely or unlikely for crypto to be tax free?
That's a great question, and is really the hot question of the last month or so, right? Everyone's asking it. You're seeing it all over the internet. It's very unlikely that crypto is going to be tax free in Australia moving forward. So the case you're talking about was a police officer who stole tons of Bitcoin, um, and what was caught doing it. So the important thing to note is that all of this information coming out and is crypto going to be tax free, it's from a criminal case. So criminal cases don't provide any sort of legal precedent for the ATO or for taxpayers or anyone, right? So um, the whole thing about it is that the judge who is presiding over this case said that it's possible that crypto is not property and that it's currency. If it was currency, remember back to the beginning, my example of the coffee, use $5 to pay for your coffee. That's not a taxable transaction. So the same would apply here if we're taking into consideration what this judge said. So um, unfortunately for taxpayers, that's not the case. The ATO has stood by their treatment of crypto as property. And like I said, since like 2014, the ATO has been releasing all this guidance. And it's very sound, it's very logical in what they're saying and the reasoning why this is all being taxed. So while this one criminal case does say it's possible crypto is currency and not property, realistically, that doesn't provide any sort of precedent. It doesn't um, tell the ATO what they need to do now, and it doesn't give any taxpayer any relief to make crypto not taxable. So everything is still the same as before that case. Crypto is taxable. It's still property. The ATO has tons of information on their website if you want to check it out for yourself. But if and when crypto ever does become non-taxable, we will do this all again and we'll talk about it again. But for now, it's still taxable.
Yeah, no, that's right. Like, maybe some people are, delaying their taxes just because they think it's going to be, but it doesn't make sense, right? Like, for ATO to actually refund billions and billions of dollars for those people who have actually paid it, it just doesn't make sense, right? So like, if Bitcoin is not a property, it's just a cash, then it's just going to pretty much mess up the whole financial systems, right? It's not just a tax thing, but it's also the whole financial system about buying and lending, borrowing, using Bitcoin as collateral. It's just going to they have to reset pretty much the whole thing, and don't think it makes sense. And
Exactly.
there's a second topic as well in terms of the potential for a superannuation tax on the unrealized capital gains, if they have over $3 million of balance, right? Like, what do you think about this hot topic that is still going on? And I know the Labour Party, they are pushing this one here. What do you think?
Yeah, I think it would be very unfortunate for not only, people who hold, high net worth individuals who hold crypto, um, but really for everyone, anyone that holds crypto in Australia, because, if you're taxed on your unrealized gains above 3 million, where does it stop from there, right? That's the question. So that's all one whole aspect. And I believe there were studies and reports that said, this would only impact about 50,000 people. Um, but over the course of your lifetime, if you're acquiring assets and you're building your net worth in unrealized gains, if you're not necessarily selling everything, once you hit that 3 million mark, let's say 20 years from now, this is going to apply to you, right? So not just the people with over 3 million now, but people that might be over 3 million in 50 years from now, right? It could apply to them. So really opens up a can of worms, and I'm not a proponent for it. I don't think it's the best idea. Um, and additionally, it really can open a can of worms. So why stop at 3 million? Why not make it 2 million now, right? So if this is passed and this is takes into effect and goes live, and this is how it is, moving forward, why stop at 3 million? Why not make it 2 million? Why stop at unrealized gains? Why not, keep snowballing and opening it up to, make people pay more and more taxes? So on one hand, the Australian government will get some more tax money, but on the other hand, these high net worth individuals, the people you want to, invest their money in Australia, they might take their money elsewhere. They might start investing in the Japanese stock market or the American stock market, right? And taking their money out of Australia, which is not good. You want all of the money in Australia. So it's not ideal, but it is what it is. If it passes, then taxpayers need to be compliant. You can't complain and say, "Oh, why did they do this? I'm not going to pay taxes on that. I don't think it's fair." You still have to be compliant. You still have to pay for it. So, yeah, I think it's an unfortunate tax for the high net worth individuals, and I really think it's gonna force a lot of people's hands and force a lot of people to move their money either outside of crypto or into less, risky investments, or even outside of Australia in general.
Yeah, no, that's right. Like, imagine if, especially it doesn't take into account the inflation, right? Like,
Hmm.
$1 million today may sound a lot, but $3 million in 20, 30 years time, when we retire, or when Bitcoin hit $1 million, just only three Bitcoin, there's already $3 million, right? So it's just, Yeah, now they just changing, like it's not just about the unrealized capital gains, but they're actually changing the principle of how the tax law is always been done. Um, yeah, that's, I don't know. Like I feel like it's gonna be a hard pass. Like I personally wouldn't, um, want to get taxed, and like I don't have $3 million in my super, but like once they start flowing through like the tax system, the mom and dad's investors, right? So yeah, now that's a bit that's gonna be a bit difficult. So Nick, in terms of the tax time, do you guys have a deal at the moment?
Yeah, great question. So for Cointree users who are new to CTC, we're offering a 30% discount for your tax plan. So that'll include this year's tax report and all previous year's tax report. So if you've never done your crypto taxes or never used CTC, now is the best time to do it and to get 30% off. So I believe the code is CT 2025. And I believe you guys will provide that in a written form. So yeah, come use CTC, get 30% off if you're a new subscriber, and get your crypto taxes done effectively, efficiently, and accurately.
Thank you so much, Nick. This is a wrap for this episode for Cointree Conversations. Big thanks to you for joining us and sharing those valuable crypto insights. If you found this helpful, please don't forget to like, subscribe, and drop any questions in the comments. And stay tuned for more episodes where we chat with experts and dive deeper into the world of crypto. Thanks for watching. We'll see you next time on Cointree Conversations. And don't forget that 30% off. Don't forget that. That's probably the most important part. So now